morning to all traders and welcome to another Market Insights video provided to you by Orbex. Today is Wednesday, the 3rd of July. And as always, every week on Wednesday, we're going to talk about gold and oil. Gold seems to be actually strengthening again. It crossed back above the 1400s. And it's very interesting to see how this is going to pan out in the next few days. And oil on the other side, following some I would say disappointing OPEC meeting in Vienna, fell yesterday over 4%, if not mistaken. And that was because OPEC and non-OPEC members decided not to extend the production cuts, and they remained actually at around 1.2 million capacity on a daily basis. So before we go to the charts, I want to go on the economic calendar quickly and see what events we expect. Today, we have, of course, a number of PMIs in Europe. I would pay attention to, of course, the German and the French, because they are most likely to create a lot of volatility. And then, of course, the Euro-wide as well around 8 a.m. GMT. Later in the session in the US, we have the ADP, non-farm employment change, and, of course, the ISM non-manufacturing PMI. Both of those will be very interesting to watch, and particularly the employment side, the employment component of those, to get some idea what numbers we can expect to be released on Friday's NFP. And later, of course, in the session, we are going to see EIA crude oil stocks change. Yesterday, we had the API, and it was a little disappointing as well, supporting the decline in oil prices. So I want to start, as always, with gold. Since we had a request to go a little bit further back in time when we analyze, I've actually done that, and I went back to 2012, if you can see here on the chart. So we are still looking in the long term to correct, okay? So we are now waiting for wave C to complete, I would say, around the 1521 level. And from there, of course, this is where we expect further clues to be revealed. Now, if, of course, that level is, prices move above that level, we'll have an invalidation of this, but at least for the upside, we are expecting prices to go to 1521. Okay, if we move on to the second chart, again, is the daily. I'm just looking a little bit, zooming in. So we are here in an ABC correction, and this is like a flat correction, to be honest, over here. So following two flats, okay? So normally we expect the last C wave to be an impulse, okay? So in the medium term, we are expecting, we are actually now working up the charts wave 3, which is an impulse. And from here, we can expect prices to either actually move higher or move lower for a correction. The correction wouldn't be, in my opinion, going below the 1350 level, okay? In case that happened, then we're probably looking at moving our labels a little bit, and we're looking for a deeper correction that could go even below the 1266 level, okay? But this would be the invalidation pretty much. Now, down on the 4-hour chart, let me just delete this quickly. Okay, now this picture is a bit more clear. If we look at the last impulse that we're looking to pretty much as an impulse, we have completed wave 4, and we are going up for wave 5. Once that happens, around 1480 or 15 even hundreds, we can look for prices to start correcting down to around 1316. Okay, we have some very good validation signals on RSI and MACD that prices could extend up for wave 5. That's one scenario. A second scenario would be that wave 5 has already ended at 1440. Okay, but the way this is forming looks like, if that is the case, then we're looking for an ABC correction with B extending above wave 5. That would make this an extended flat correction, okay? And again, we're looking for prices to correct down to around 1360. Okay, this is where the wave one top is, and I don't think prices actually are going to go below that level. If that was the case, as I said before, we're probably most likely going to 1266, but chances of going below that level are very, very limited. Now, when I go quickly on oil as well, I went a little bit back as well as requested. So here we're looking at a correction again. Okay, in the longer term, we had wave 1, 2, wave 3, wave 4, and a truncated wave 5. Okay, and from here, of course, correction, wave A, correction, wave B, and we're expecting an impulse to end this correction around the 94 level, I would say, okay? But this is longer term, of course. Now, if we go a little bit closer and we look at the 4-hour chart, on the 4-hour chart, we are still looking for this as wave C, okay? Now, this has extended a little bit as a zigzag, okay, on the upside, and also zigzag on the downside. So if we look at it as an impulse with wave 1 and wave 2, we have really retraced down to the Fibonacci golden ratio around the 50 level. Okay, so from here, in the shorter term, we also gone up with an impulse. Now, the cases are here also too. One is that we're seeing this as wave 3, the 60 level, with a correction wave 4, and we are expecting an impulse to complete this as wave 5, okay, or an ending triangle or anything actually, just to complete this impulse wave, and then we're looking for prices to start moving lower, and we're going to receive further clues. Or the other scenario would be to that we have ended this impulse move around 60, and now we should be able, after this correction, to start looking for another impulse wave to the downside that would potentially take prices down around 47 level. The thing is, both scenarios, of course, the RSI and MACD are supporting bulls. There seems to be some bullish bias, and that is the reason I am leaning towards the first scenario, where another move to the upside, maybe around the 62, 63 level, can be seen. I want to thank you for watching for another day, and I want to remind you, as always, to visit our blog. It's where we'll cover the latest news, provide trading ideas, and offer all the necessary tools a trader needs.